Greetings, this is Jeff Scott. It is 10:30 on August 10th, and welcome to this week's webinar. Before I get started, let's take a quick look at the futures. When I last looked, they weren't doing much, and I think we could stay the same here. Dow up 10, S&P up less than a point, NASDAQ down about 2 points. That's fair value. You can see the actual numbers above them. Asia's opening up higher in response to the higher close and market action in the U.S. on Friday. Oil up a few pennies, and gold, at least at this hour, down $2.50. As always, I'll start with a PowerPoint, look at some of my data on how last week did, and give some thoughts towards next week. Title's a long one, but I think it really defines what I'm concerned about or thinking about. Was Friday the end of the correction, or just the beginning of a counter trend rally before the ultimate fall? As I'm watching the market do great on Friday, making some money on my longs, covering some of my shorts as the day went on, I watched the little ticker on one of the, I think, Fox Business talking about the concern about a big correction coming. So, clearly Friday was a good day for the bulls. Might expect a couple more days up. How high it goes, we'll see, but let's see what the charts are telling us. Disclaimer, as always, this is for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I am not a licensed broker. I am a licensed physician. Actually, I gave up my license when I retired, so I'm not licensed to do anything. And I am independent and not officially affiliated with any software company, and I paid for the tools that I demonstrate. Not going to spend a whole lot of time here, except to say this is really my wall of heroes, people who I've learned from that have really made a difference in my trading career, whether it's Ian and Ron, whether it's Alexander, Elder and Carey, whether it's John Person, whether it's George Lee, whether it's Morales and Catchers and the other guys represented by their books, which I've talked about before. I have a lot of programs. I need a real-time platform. It's funny. I've been paying for Genesis forever. I can't tell that to my wife. And hardly ever used it until I started spending more time with John Person. And now during the day, it's probably the key real-time platform that I use. And I use it because it's got a number of things in it that I don't have anywhere else. And it's also very clean. I do use TradeStation or Thinkorswim as well. For analysis, I'm a fan of HGSI and EdgeRater. I do like seasonality, of which I can get good stuff on Genesis, as well as Best Choice, Magenta Trader, EdgeRater now, and Gecko Trade Miner is probably the least expensive. And then I use MarketSmith for backup for fundamentals and some screening. I always look at this chart and wonder, are we ever going over this shoulder into stage 4? Certainly felt like we were there. And the question is, was Friday just a little bit of a blip? And are we going back down? How much will that blip be? Or do we take out previous highs, which would be surprising to me, but I want to play the market I get, not the market that I expect to get. Canaries, not only do they have a pulse, but they're also the leading index for me right now. These were great leaders up until February, March of 2014, had a double top, rolled over, and really preceded all the market turbulence. And you could see they're not at a new high by any means, but they are quite a bit off their lows and closed up for the week. You'll notice that the volume on Friday was low across the board, and something that might be a bellwether. Current LLURs from the March PV meeting, these broke down in late July, and you can see they're sort of going sideways here, which is better than continuing to fall. And I'll be watching to see if this index can get up above that 8-day exponential. If it does, my target would be running back up to the 50 and testing what once was support, which will now be resistance. Again, volume was low on Friday. And then what we put together in Florida broke through the 50, also sitting right under the 8-day exponential. So as I look at these, except perhaps the Canaries, these are at a pretty pivotal period for these two indexes. And remember, we use these as predictors for the market as a rule, acknowledging that those that have led over the most recent run-up also seem to fall quickly and could give us a signal that the market was changing. As you can see, low volume again on Friday, and really going sideways, setting up a bit of a triangle. Market themes, you could be a bull or a bear. You want to be bullish. The economy certainly is improving. There is no sign of rising rates anywhere in the world. Small stocks pull back nearly 9%. Most, as we've learned from Ian, most of the market corrections don't go beyond 8 to 10%. And so we're at a point now where you'd expect a bounce. Friday, we did have a broad-based rally off of major support. I put a note out late in the evening Thursday night about the fall in the futures, and we saw that rally despite early major, 0.5% down across the board. And what I thought might happen, and others said the same thing, was that shorts would cover on Friday, and the market would cross their fingers that the world wouldn't blow up over the weekend. And since the world hasn't blown up, then the bull case is the market rise will continue. Israel and Hamas seem to have another truce. I think the big thing the market's working for is the Germans to announce some type of agreement with Putin to back down. The bear case. The sell in May and go away case is still in force. It's summertime. It's August. We should expect several more weeks of low volume volatility. As I pointed out, Friday's bounce was on low average volume. Where is the conviction? Speaking of conviction, I think there's more people still convinced we have a bigger correction coming. And one has to wonder, was the drop in the VIX and the dollar a one-day wonder, or does it signal a reversal? Future meetings coming up quickly in October. John Person's having a seminar. I'll be participating. Email me for more information. George Lee doing an advanced summit in October. The PV meeting later in October. Vegas on hold for now from my perspective because there's a Magenta meeting at the same time. I didn't want to conflict. And I'm working on a second meeting down in South Florida come February. Week ahead, you can see we will have the natural gas and oil early on the 14th. Also, we'll have the employment on the 14th as well, which is all Thursday. Earnings seeming to slow down, but pointing out a couple that you might care about. BITA, a high flyer in the HGSI and internet and the IBD world on Monday before the open. GoGo Internet, Mankind, the big one, Priceline, on before the open Monday. During and after the close on Monday, Fuel Tech. It made my list of interesting stocks, but I wouldn't touch anything the day of earnings until earnings are out. Anything else that jumps out at me here? Nuance, Halozyme, Hertz. Tuesday, Noah's been running lately, some of the solar stocks. JDSU. Wednesday, you can read yourself, stop it, and take a look at things. If you're playing JD, it's on Friday before the open. All right, let's take a look at charts. Let's start with how the market did last week. So, as always, I start by looking at where the S&P was, and it was up about 0.33%, so a relatively flat week. I look at black versus red, and I see that there were many groups, more groups were up versus down. For those who haven't been here before, I have a number of watch groups that I monitor and find most of my stock picks in. I see that the HGS 100 and IBD 50 both were up about 1%, which is substantially greater than what the S&P was. My buy watch was up 1.83%. These are the stocks that I highlighted. Now, interestingly, I was only about 50-50, which was the same for the HGS 100, but there were some big movers there. High beta stocks outperformed up nearly 4%. And the Bible gap ups were up a lot. Interestingly, 50-50. We go down and look at them just out of curiosity. Techmira, I think I did mention Techmira last time as a stock that I was watching because of Ebola, and it certainly had a big run up 45%, although it's probably not the best Ebola play out there. I could look at Monday to Monday. I like looking at end of day Friday to Friday because I make my picks over the weekend. But on Monday to Monday, it doesn't really change much. From a Hindi perspective, this goes back to May. You could see we've not fired and there's still nothing on the horizon. From a bucketology, last week, I thought that we were at a bottom here and that we would bounce, and we did. This is what good looks like. This is July 3rd when we had 19% of stocks in the S&P 1500 above the upper band. We predicted based upon this that we were at a bounce early in the week. It was not much of a bounce, frankly, until Friday. But we did bounce, and you could see we still have 2/3 of the stocks in the S&P 1500 trading below the midline on the Bollinger Bands. From the market perspective, the good news is, and this is current time, January till August, and this is actually March until August, I'm sorry, 3/11, and this is 10/13 through 3/10. What you want to see if you're a bull are periods that look like this, where all the major indices are trading in the upper third of their Bollinger Bands. These are times that you can go long and make a lot of money. When you see red, it's going to be difficult to make money on the long side. You probably want to play it short, contras or in cash. And you can see over the last 5 months, we've had small bursts of green. Mostly we've been in chop, and we had a couple days sell off here with the red. And it'll be interesting to see if this is just continued chop or the yellow goes to blue and signals a change. You can see we had some kahunas over the last couple days in the major indices. I'm not going to spend much time on the George Lee daily and weekly signals, but if you look at the Morales and Catcher code blue, this is on my trading universe, which is 250 and I think 150,000 shares. We go down to 80 on the code blue, the stocks to potentially buy, only 17 or 18 on the code red. The message there, and I saw that across the board, was we saw a lot more buy signals this week than sell signals, and we had sort of a bounce back from fairly oversold, and you could see in the bullish types of searches that I run last week, there were hardly any stocks there. From a person's pivots perspective, I highly advise you read his books. There's a reason why I follow John, and I've got this really special opportunity since his office is around the corner from where I live, that I spend a lot of days in his office watching him trade and learning more from him. I've been a student of his for a long time. These are two of the books that I've read of his. This book on the left is a good starter book. It's got a lot of things besides stocks, but it gives you the basis. And then this is his mostly stock book, but some Forex and futures. He's a stock and futures guy. He does very little Forex trading. And he has a number of interesting signals, which I've coded for myself within EdgeRater, which I use to find signals in during the market and after. I can also look at key ETFs, and I see that many of them here are at support. And I'm looking for high closed dojis, which is a buy signal, and low closed dojis, which are a sell signal occurring on support. You can see on gold, for example, it's got, you're within 1.5% of the daily, weekly, and monthly pivot support and had a high closed doji on it. That's can be a interesting signal. The industrials showed up high on a lot of my other lists. No big surprise there. And then, let's see. The other thing I want to show on seasonality in the ETFs was over the next month. This is using EdgeRater. Darn, that was gold. I'm almost certain. Let me run this real quick. Yeah, you can see it right here. That over the next month, silver and gold are the leaders, up 6 and 3% based upon historical seasonality. And the weak part in the market over the next month, although the numbers here are not that convincing, have been natural gas and oil. But what's convincing to me is when I see TLT is up 2% over the next month, 9 out of 12 times. These numbers here, which are sort of 50-50, are not that convincing. All right, let's take a look at my TradeStation. TradeStation, what I like to look at very quickly are the color of the bars to get an idea of whether they are the buying window, as Elton Elder called it at our live meeting, is open or closed. Start with the NASDAQ. Blue means you can buy, sell, or hold. It means two things. It means price is either above its exponential moving average or the MACD is rising. So even though it's still negative, it was less negative on Friday than Thursday, so that's the half of the equation. The exponential moving average is up here. That did not trigger. We have a blue candle, which means you sort of are open to do whatever you want to do. MACD divergences the entire way up still persist, the little red dots here. You can see we had MACD divergences here, which got relieved. And if you just look higher high than here, and you can see lower MACD histogram, so no surprise there. Often these divergences will lead to a pullback. So we're blue across the board, so one could argue that the buying window for NASDAQ or selling window, for that matter, are open. The Dow sold off down to the lower band, had a blue day as well, still red on the weekly. You could see it too had MACD divergences on the daily and the weekly. I'd be a little bit less looking to jump into Dow stocks. Russell 2000, they led last week, and you can see we actually got a green dot, which means the green bar, we crossed over the exponential moving average, and the MACD continues to head north or up. Red on the weekly, blue on the monthly, so clearly not all clear. I think this is sort of where we're living right now. We're either early in a bounce, or we're just going to fail and take out prior lows, which we'll talk more about. Semis, which were weak, have really gone sideways, still red on the weekly. S&P 500 had a big reversal day on Thursday. I believe that's Thursday. This might actually be today. Let's see. And these are trading, so let me see. Come on, Jeffrey. Let me open up my little. Yeah. So this is the bar from, you can see the big bar on Friday turned blue, red. So we've got red weeklies across the board. You'd be okay to stay to the sidelines. I think reality is we might be having a bounce here, and I'm going to lean towards the long side, but I'm going to have to I'll look at my other charts to set some parameters. I don't think we have an all clear, but it's hard to ignore what we saw on Friday. Speaking of Friday, let me go one more thing to look at. If I go into my big radar, I look at a couple of things. I see the 3X bulls, 7.5% on natural gas longs, 5% on energy bull ERX, 4.96 on retail. This is a season time for retail, something that John's been talking about for a couple of weeks now. The only weakness was in treasuries. If you look at the 3X bears, they were down across the board. Natural gas down 8%, energy down 5%. And they should be equal and opposite to the 3X bulls. All of our sectors were up on Friday. The big winner at 1.67 was energy at 1.9. 1.99 was utilities. Never like to see that. Consumer discretionary, which is where I guess retailers, was up 155. But you could see everything was up with pocket pivots on a couple select financials. On the XLF had a pocket pivot. You could see the volume there, 51 million versus an average of 27%. And you can see we had a lot of viable gap ups this weekend as well. I'm sure you have other places finding them. I like my TradeStation indicator set because they pick them up early on during the market day. So I get an idea very early on if they're going to fire. Let's go into HGSI. And what I like to do, and everything's going to be off size, I'll have to size everything because I've been using a much higher resolution on my usual work. I have to dummy down the resolution to do my broadcast, or else it would take you 3 weeks to upload and download. All right, let's go into Major Markets Plus. Let's go into the T1. I want to point out to everybody there's a new Woodward and Brown group out, and I should be using it, shouldn't I? So let me shut that down and go into this one here. Came out within the last week. So T.1 gives me sort of a broad-based over the last two to 3 weeks, with much emphasis on the last day and the last 5 days. You can see that industrials up near the top, as were Russell and the small caps. So if you felt it was a good week, that's why. If you look at for 5 days, volatility dropped 7.4%. Silver down here, semis, as I mentioned before, had been weak. Transports were down. And you could see the strength of the small caps over the last 5 days where they were the leaders. On 1 day performance, utilities led, which can never be a great thing. Transports rebounded up 1.3%, and the S&P was up 1.2%, and the smaller stocks were sort of in the middle. Let's take a look at some of our favorite indexes and see if we can get some parameters. So here's the S&P 500. So I'm going to go into my favorite view, and then I'm going to come out of it. So the reason why I went into my favorite view was to show you that there were no phoenixes, or eurekas over the last 5 days. 1, 2, 3, 4, 5. There was one the prior Friday when we hit that oversold number. Now let's go into something that shows better, which is up here. And I want to do a couple of things. Let me build this. Let me get me some more. All right. So, it's been painful for the bulls for a while now. But if you just put a weekly chart on this, how can it be painful? This has been a major bull run. So as much as I want to sometimes feel bearish and be concerned, since the 2009 bottom, we've nearly tripled. And on a weekly chart, does that look like we have a problem? It looks like we pulled back to the 50-day or 50 weekly moving average, had a doji at the the 17 weekly average. So almost 85-day moving average. We pull back to the 17-day moving average on the S&P 500 on a weekly chart, 17 weekly, and we close with the doji. We haven't broken anything. So one could say that we remain in a strong uptrend, and there are probably some people out there that until the weekly breaks below the 50 will still feel like we're in an uptrend. So I think I have to pay respect here and recognize, despite my bearish sentiment over the last 3 weeks, which was warranted, that we still are in a major uptrend, and we have not had a major correction yet, at least in the S&P 500. So we'll look at that in a second. I'm always curious what Ian has to say. So let's very quickly go into HGSI to the website. And this is one of the goodies here. And you go up into Investment Strategies, Ian Woodward blog. Hanging on a thread at the crossroads. We are hoping for a further move up, and yet we can trundle down quickly. I would fully agree. So that's the S&P 500. Let's take a look at the Dow Jones Industrials. On the weekly, a little bit more of a pullback heading down towards that 50 weekly. On the daily, you could see it pull down here, and this is why on Friday, when I saw the futures were selling off hard, I said this could be the point that we might see a bounce. Interestingly, most of the bounce, I think, occurred overnight, and the market just opened up and had a great day, closing right below the 8-day exponential. So if I'm bullish, and actually probably doesn't matter what I am, if I'm bullish, I'm expecting a run up here and a test of the 50-day moving average, which was decent support here and maybe resistance. The first thing I'm going to see is it get above the 8-day exponential. If I'm bearish, then I think I'm going to take out these lows. So let's play with this, and I'm going to show you how I'm going to play this market this week. Right there, let's see if I can figure out what that is. The low of Thursday was 16,334. So that 16 I'm going to call that my downside risk target. Now, what does that mean? It means that if we break trade below this, I'm going to think that the market is going to be heading south. All right, so a break below that, in my mind, equals potential for, oh, I didn't just do that, did I? Let me fix that. So a break below this line would suggest to me that this market is at risk. All right. So if we break below that, I'm going to be worried about a little bit more of a correction. On the other hand, I'm going to use that 8-day exponential the way that Bigelow uses it and say, if we're trading up, we're going to go above that. So I'm going to watch what the market does. If the market trades within this long bar, and this is a long bar, the high is 16,556 and the low is 16,364. So you got 180 plus 192 point swing in here between the low and the high. If, and you notice this 8-day is kind of about where the high was of the week, at least from opening and close high. If I can get above that point, I'm going to play this market to the long side. If, on the other hand, I cannot get above this point, then I'm not going to be jumping and doing a lot of trading. If I get below this point, I want to take this market to the downside. So I potentially will see a trading range in here, and I'm going to look for break above, in which case my target will go up here at least to the 50-day moving average. And if we break below, God only knows where we fall. We could fall down to a round number of about 16,000. So that's how I'm going to play it next week. And I'm going to let the market tell me what it's going to do. If the market trades down, I'm going to watch to see when it tries to get back above this point. And if it fails here, then I'm going to be expecting a big move down. I do expect, frankly, that what we're going to see is going to be a move up and probably a test and then another move up. And that's what I think will happen. But who cares what Jeffrey thinks? What I'm going to be doing and what I recommend you do is I'm going to watch this bar. If we break above it, the 8-day, I want to be long. And if we don't, we're going to be range bound unless we take out the low, in which case I'm going to think otherwise. That's the Dow. I could be doing this on any of these indexes. On the S&P, here's my low here. Same thing on the 8-day exponential, same thing on the 50. If I look at the Russell, it's got a ways to go. It broke above the 8-day exponential. It's got some higher lows. Still has to get up here and break a test of the 200, which I think may be substantial resistance. We shall see. If I look at the utilities, they came down close to the 200. They look like they want to go up and test the 50. This is what I'd like to see the Dow and the S&P look like when I do my end of day tomorrow, which is a breakout above the 8-day and close near the high of the day. That's if you're bullish. If I look at the VIX, you can see, whoops, we'll come back to the dollar. The VIX had a little congestion zone up here and then sold off on Friday. If the VIX breaks out above this, then more reason to be bearish. If the VIX can pull back down to underneath the 200 and the 50-day moving average, I'll be a little bit more comfortable, but you can see the VIX has had a big move up. I mentioned the one-day wonder. Would it be more or longer on the dollar? As I said several times, a rising dollar is not always good for the stock market. And you can see we had a shooting star on the dollar on Thursday, and then the dollar sold off, but recovered much of its loss on Friday. So I'll go back to and let me mark up the S&P chart just to summarize my feelings. We have been in a massive bull market. If we look at things like weekly charts, we are still in a very powerful run-up with a doji on the 17-day weekly. There is nothing bearish about this chart. So temper your bearish, intermediate, and long-term enthusiasm by looking at this chart. And I ask you, where is it on the right edge that says we should be worried on Monday? So for you type 3s and 4s, you long-term position traders, you might still be in this market. Again, we've had a couple weeks sell-off, there's no question. But it looks pretty decent on a weekly chart. On a daily chart, you see the damage we've had. Yet, here's how I would look at this for tomorrow. I'm going to set my downside at the low of the prior week, which is about that. And that was seen on Thursday. The low was 1905, let's call it. Low. Call it. Remember what I called it? 19, 6, 14, 22, 11, 12. Called 1907. I can't remember what it was, but I think it was about 1907. Let's see what it was. 1905. All right, so I'm going to be looking for that to be my support. My resistance, as I start the week, I'm going to take it up here. My resistance is going to be at about 1932. So I'm going to play this week to see if I get a break above that 8-day. Here's my target, as I said before, that 50. So I'm going to watch the futures. I'm not necessarily going to jump head first in the market overnight, either long or short. I am net long right now in the market. If I take out last week's low, I'm going to be worried that we're going to take a test down to here. If I take out the 8-day, I think I've got a small run up until this range off the 200-day moving average. But I'm going to let how the market behaves drive my behavior. Let's look at some other things. If I go into O2 and Ron Ian's groups, I look at the S&P 1500 and it shows me volume. So as we already talked about, we had a low volume day on Friday. We are living at support here on the 200-day moving average. No surprise. This includes the 600, the 400, and the 500. What I can do with this is I can look at some of the eye charts. And just to look at a couple of my favorites. These are some older charts that you'll get if you go to the PV meeting. We can look at, looks at highs versus lows, a 13-day exponential. If the number, the high versus low number, is above its exponential moving average, you're in the green. You could see we had a sell signal and went green on Friday. Here looks at new highs versus new lows. Are they new highs minus new lows? If they're greater than 0 and less than 65, you get the light green. If they're greater than 65, which is really bullish, you get the dark green. And you get rose color if your new lows are more than your new highs. We went back to green, which is a nice sign on Friday. I can look at distribution. I see that the E's are heading down and the A's are slightly moving up. I can look here. Here's my D's. Here's my E's. You can see A's and B's are at the bottom. You notice that accumulation distribution is also kind of a D color. Again, A versus E's, and this is the A's and B's less than the 10-day moving average. If you're bearish, this is a bearish signal. I got to break above that moving average before I want to believe this market has changed. So here we have the E's falling, A's slightly rising. In blue, we have advanced decline line. Had pulled back but turned up on Friday, and then we have up-down volume, 21-day average, in brown, down around the bottom, looks like it wants to bounce. If I look at 5-to-1 days, we had a 5-to-1 day, we did not have a 10-to-1 day. This means that advances to decliner issues in volume were 5-to-1 up, which is a very positive day. And if I look at percentage of stocks trading above their 20, 30, 50, and 200-day, we seem to be trailing up. We crossed above the moving average on the 20. So even though the indexes seem to be stagnant down here on the 200, I think we're seeing some evidence that we're moving up. I'm going to change this chart for a second. One of the things that we have done is on the Eureka and Phoenix, we've changed it to the NASDAQ for monitoring. So let me just change these. And you should see that we had one of these a week ago. If I did that right, you should see a red. Nope. Yep. All right. So we should have seen a Phoenix here. Let me just go back and check that. Eureka NYSI. Yep. I guess on the S&P 1500, perhaps we didn't. We did see it, I thought, on the NASDAQ. All right, so these are trending up. So perhaps we're due for a bounce. All right. If I look at industry groups, I get another idea of strength of the market. On the latest update of HGSI, we're now up to 200 industry groups. And you could see with the T1 going back through time, specialty apparel, a lot of shoe companies, Skechers leading, refiners moving up, biotech moving up. Saw one surprise this weekend, which was a lot of home builders moving up. Let's look at just two-day force up and down. You can see we have 80 on the two-day force up and only 15 on the force down. What's not working? Automobile manufacturers, agriculture, internet media. See some of the smaller stocks there. Base metals, casinos, computer storage, large pharma, and managed care. What is working? Let's take a look at the top 10. This is an index of all the indexes, so that doesn't count. So the first real one is exploration and production. What I saw on my review was that there are a lot of good-looking small oil stocks. Go into my more familiar view. So this is PDC. You can see it having them run up from 50 to 60, breaking above the 50 on a kahuna. On balance volume breaking above the moving average with a mobile breakout and a viable gap up. Here's Anadarko Pete. This I don't consider to be a small guy by any means. Sideways consolidation to the 50. Had a kahuna OBV moving up. Has got great earnings per share growth. Trades at a multiple of 25, small dividend. This might be a good place to pick up a leader on the oil. ConocoPhillips pull back a little bit harder. You can see all the red above. Some of my favorites this weekend, and there were a lot that I liked in this group. Is Bonanza Creek ready to run again? It had a pocket pivot. Volume came into the stock. I'd have to see it take out its PSAR dot, but I love its earnings per share growth. That was one that I liked. Sanchez was another one based upon the earnings per share growth. Looks like it's put in the bottom here. I'd like to see it take out its PSAR before I did that. I actually liked a number of the small ones, and you'll see that when I show you the ones that are on my buy watch list. That's not to say that a lot of these stocks, here's Continental, same pattern, pullback, looks like it wants to run, had a kahuna on Friday. So exploration and production had a nice recovery this past week. Seasonally, they might be going through a weak time. Specialty pharma, I mentioned Techmira last time, and this is because of the potential story with Ebola. The stock whose drug was actually used to fight Ebola was BioCryst. On the other hand, the FDA did reduce some of the limitations on its drug. You could see all green, viable gap up Thursday and Friday. Big kahuna, you can see the on-balance volume. Obviously, a lot of interest in this stock. All I could say is be careful. This is news-driven, and it's driven based upon, and you could see it was a nothing stock until some of the Ebola noise earlier this year. And you could see it run up in March, and then it sold off, and looks like it wants to run again. Allergan is in a proxy war with Valiant, and this is the Valiant buy move. They started doing some things from management perspective to make them leaner and meaner. You can see on-balance volume is negative. They pull back hard. I don't play these games. Raptor had some good numbers come out. Kahuna still below the 200-day moving average. You know, the market sold off the last couple of weeks. We're going to see a lot of stocks below the 200 moving average today. Horizon sold off hard. Is it trying to make a run? It's going to have to get above the 200-day moving average. Anything here that, here's Pacira. We talked about this last week. It continues to ignore gravity and laws of nature and continues on a big run. Everything is green, lots of pocket pivots, great on-balance volume. This is one of the leading Momo stocks in the market right now, and it will run until it doesn't anymore. Here's Valiant, the other side of the takeover deal. And you could see it has been in a downtrend ever since that deal was announced. Not because the people didn't like the deal, they liked the deal, but it doesn't seem to be happening. It had bingos, which is a sign of the capitulation. If I can see a kahuna come in the next couple of days, it might get interesting, but right now it's in deep caca. Next group down in third place is renewable energy, and some of the solar stocks looking interesting. This is SunEdison, who has a nice earnings report, gapped up and is above the 50, had a PSA reversible, viable gap up there. I would be doing things like going into daily graphs, and I may not be certain of those earnings, and so it does not look too good here on earnings per share. It does look, however, that it's setting up and wants to run and potentially take out prior highs. So SunEdison looks interesting. First Solar broke above the 50. Multiple pocket pivots in kahuna, positive on balance volume, negative weekly kahuna. Might be setting up, might be one to watch as well. Back. Biotech. Medivation is has a drug called Xtandi. And Xtandi is used for prostate cancer. And Wall Street is very aware that sometime in the next 4 to 8 weeks, there should be an FDA label expansion, giving them an approval to sell it in the first-line metastatic prostate patients. It is a very exciting drug and an exciting story. You can see OBV is heading up. Pocket pivot in kahuna on Friday when they had good earnings, a bounce off the 50. Viable gap up, great earnings per share growth coming in. This is one to keep an eye on. 6 billion market cap. The downside of Medivation is they have a co-marketing agreement with Astellas, which might make them less likely to be bought out. Everything I said is very publicly available about the new drug. Nice looking chart. Clovis, I know this. Well, first of all, Clovis is getting a lot of good press and a lot of analyst upgrades. Clovis has been sitting here on a bottom that goes back really until the beginning of July, so for over a month. On Friday, it gapped up, got above the 50 on a kahuna, rising on balance volume, mobile breakout from a squeeze. You don't buy this stock for its earnings because it doesn't have any. You buy this stock because of its potential, and it's got a number of drug candidates that may get approved by the end of next year. Another reason you buy this stock is its CEO, a guy named Patrick Mahaffey, has got a great track record of taking his companies and getting them bought at a high multiple. Puma had some good research. This is why some of these drugs are fun to own. It's hard to be in it when it doesn't look like this, but those that were long-term holders certainly got rewarded. I don't chase these things once they run. Intercept, this was the beginning of the year. It looks like it's in a viable position now. Problem is it's $240 stock, $230 stock. It's been basing, had a kahuna on Friday, mobile breakout from a squeeze. I think it was up 12 or 13 bucks. And that might be an interesting one as well. Here's that BioCryst, which is the other play on Ebola. Not a fun thing to have in your neighborhood. I guess I want to continue here because there's a couple others that I like. Biogen IDEC. Good place to look at it on its 50. It's got a PSAR negative though. It's got earnings per share growth coming in much higher than it trades at. A leader in orphan drugs, MS, etc. I always like to buy it off the 50 in an uptrend. It's in an uptrend and sitting on the 50. Gilead, a leader, lots of background noise about its pricing. It will continue to chug higher. Look at its earnings per share growth. And Celgene, I own several of these stocks. Celgene's had an interesting buy point too, as it's coming off of its 50. Had a kahuna on Friday. Don't like its on-balance volume heading negative. If I look at a weekly, it's above the moving average, but that's about all I can say. So these stocks have got hit hard. Some of them look interesting, and there are several that we mentioned. I go back. Utilities being strong is never a good thing. Communication equipment, UBNT. I've been burned on this guy before. It either has great earnings or horrible ones, and it had good earnings and it gapped up to the 200-day moving average. Pocket pivots, kahuna rising OBV, mobile breakout from the squeeze. Buy at your own risk. As I said, I've done horrible with this stock. Apple, interesting position. It's pulled back to a rising 50-day moving average. Often in an uptrend. I've seen stocks go sideways, the 50-day catches up, and they move off of it. Against that would be seasonality, diminishing earnings, group strength going down, and it's had a PSAR reversal, but this might be one to watch if the market stages a recovery. So I will typically go through the top 10 lists, which I've done prior to this. Semiconductor Devices, NVIDIA, go down to my favorite. So NVIDIA, I don't like its earnings per share growth. They're going to slow down in the out years, but you got to love this. It pulled down to the 50, and then on Friday had a kahuna, pocket pivot, and a Bible gap up and a mobile breakout on earnings. Took out its 50. If I wanted to buy this one, I'd buy it if it traded up on Monday and set my stop somewhere either between the low, probably at the low of the prior day, maybe even the PSAR dot. NVIDIA looks interesting, although I don't like its earnings going further. My favorite in the group has been RFMD, who's closing on TriPoint Semiconductor. Awesome earnings per share growth until that stops. Pausing to refresh here. I'd like to see a PSA reversal get me into the stock. But notice even with it slowing down, its on-balance volume remains above its moving average, and have like RFMD this entire run up. Oil gas services. Charts don't look great, but these guys made it to the top 10 after some pullbacks. This is Dresser Rand Corp. Sideways, not too exciting on this one. Schlumberger, one of the leaders, giving you perhaps an entry. You might set buy stops above the PSAR dot, and if the market trades above there, maybe above the 50-day moving average, you get into this stock. But I'd like to see it get above that PSAR dot, if not the 50, before I jumped in. Rig, these are bingos, no kahunas, I pass. Halliburton is a lot like Schlumberger, pulling back. Again, like to see it get above the 50. You could see the bongos and forces went red. These have been in a multi-week sell-off after just a huge run since the beginning of this year. The one that I liked the most was Baker Hughes. And what I really liked about it was its outstanding earnings per share coming into the stock. But I don't like the on-balance volume. But if I saw a move up, getting above the 8-day exponential on a kahuna or a pocket pivot or a Bible gap up, I might be interested. Specialty apparel. This is a seasonal time going into January, February to get into this group. Here's Coach. They've been a stock that people like to kick for some time, but on-balance volume heading up. Kahunas, pocket pivots, breaking above the 50-day moving average, mobile breakup, pretty much everything green. It's a stock that looks interesting to get into here. The gap had a gap up, no pun intended. Mobile breakup from a squeeze. Pocket pivot and kahuna looks interesting as well. Here's limited L brands, used to be limited brands. same story. So 3 in a row, pocket pivots, kahunas, gap ups, everything turning green. Something's going on in specialty apparel. This one's least interesting to me. Here's TJX breaking above the 50 and the 65 exponential on a kahuna, mobile breakout from a squeeze. So we might be seeing the predicted by John Person in seasonality and cycle work of specialty apparel and retail. I want to point out home builders. They're making it up the list. They all look the same. And you could see 5-day returns here are positive across the board. And this is what you see. Stocks in a deep correction that look like they're reversing. And everything is red here. High risk entry. But if they break above the 8-day, perhaps they break, they're going to have to get through the 200 and then the 50. But that's Horton. Here's Pulte. Here's Lennar. Here's Toll Brothers. Here's Ryland. And there's the index. So something is going on with home builders. They've had multiple false starts for me in the past. I've got a little bit of KB Home, and it's underperforming the others. It was up, however, almost 2% on Friday. Has the same exact picture. Might be worth a nibble, but it's not without risk. Looking back, what else I want to point out? Refiners. I liked several of these. They had a big 5-day run in a weak market. This is DK. These guys have the most up and down earnings per share growth of any group I follow. Pays a 1.8% dividend. Everything turned green. This is Phillips 66. Nice looking chart. Run up, sideways. Multiple kahunas coming in. Mobile breakout from a squeeze. The 2 pays a dividend of 2.4%. We have Valero. Similar looking chart. The one that I own is Western, and it broke out as well, and actually is breaking out to certainly recent highs, if not all-time highs on this stock, at least since the market recovered on this stock. So refiners look good with several participating. Now, I will always go through my top stocks, then I'll go back up to all securities, and I'll start to do my scans. I'll look for 5x volume. There's Techmira we already looked at. Here's Air Methods. Don't know anything about this. I think they're ambulances for hospitals. Not very exciting. Probably gap up on earnings. Pocket pivots, kahunas, rising OBV, mobile breakout from a viable gap up from a squeeze. I'm not into this group. I don't follow this group, but certainly a nice looking chart. Not interested for me. 3Xs. Look at Mercado Libre. This is the South American eBay mobile breakout from a squeeze and a viable gap up on earnings. Everything is green. Makes money, but not a lot of earnings per share growth. Trades at a multiple of 36. Some of my other favorite scans, I like the free parking scan, looking for stocks and uptrends that are pulling back to the 50 and have had a forced kahuna. So these are stocks that I'd like to buy off of support. Here's my kahuna. Here's my forces are both green. Mobile breakout from a squeeze. CVS kind of going sideways, not my favorite. PDC Energy we looked at before. It's got to be above the 200-day. So it was in an uptrend, been sideways, got back above the 50. And then what we see here on the daily, had a kahuna and a mobile breakout above the 50. That looked interesting. I liked its earnings per share growth. Edison is a utility, not into utilities. How much does this one pay? 2.5%. So they all are going to have a kahuna, be within 1% of the 50. And I'm trying to find them in a bit of an uptrend that pull back. Interestingly, we talked about retail. Here's retail. Pull back below the 50, had a kahuna. Looks like it wants to break above it. WGL Holdings. Problem is, in a market that has sold off, I might not see anything that's been in a nice uptrend. So Marathon is one of those oil companies, traded up, pulled back. It's at the 50, had a kahuna. Forces are green. I'd like to see it get above the PSAR dot. So nothing really hit me on the head in this list. So I'll go to the next list. I look at my PSR close at a squeeze, bull scan. Here's one of those small oil companies, QEP Resources. So this one, you have to be in a squeeze. So that means the Bollinger's inside the Keltner. The price has to be very close to the PSAR dot. And I'm looking for the stock intraday to take out that PSAR. And that's where my buy signal would come in. So we had a pocket pivot, a mobile breakout. Everything is green right below the PSAR dot. Protective Life, it's a buyout. Forget it. Edison, here's that utility, not interested. SAIA, I think this is a trucking and logistics company. There are some interesting truckers. So in an uptrend, right above the 50, actually pulled back and touched below the 50 on Friday, closed up here, right below the PSAR dot in a squeeze. This is what I'm looking for. Stocks in an uptrend, going sideways, squeezing, takes out the PSAR. That might be an interesting buy point. Piper Jaffray, similar story, going sideways after an uptrend, mobile breakup from a squeeze right below the PSAR dot. It had a forced kahuna and a pocket pivot. That looks interesting. Let it take out the PSAR dot. Backset Research, so again, uptrend, sideways, right below the PSAR dot. So this scan is working, and it's finding me stocks that are meeting the criteria that I like to trade. Then I'll look at something such as Gallardi Sprinters, see if there's anything there that looks good. I mentioned Skeechers. It's already had its run. And you could see it broke out back here above its PSAR dot after a kahuna, pocket pivot, mobile breakout, and everything turned green. It's had a nice little run up. It actually showed up on my scan as being right on this day right here, right below the PSAR dot, and then it would have been, this was the day to go long the next day. Last thing that I usually do is my group inclusion, where I look at my top number of stocks based upon the group inclusion report. Let's see what we have in here. These were my top 30. We haven't seen all of them. I'll look at a couple more. VIPS, God bless you if you're holding on to this. Beautiful lower left, upper right, and tight. It's below its PSAR dot. It's been resilient during the market sell-off. Great earnings per share growth. It's resilient until it stops. Trinity had sold off. Greenbrier actually looks a little bit stronger. I'm looking for a recovery on this. I've been involved in making, refurbishing rail cars now that the oil industry uses the rails. Under Armour, another specialty apparel on a nice move. Bit Auto, what another beautiful lower left, upper right stock running up at highs of the all-time highs, multiple pocket pivots. Like PCRX, a great momentum stock in the market right now. Here's SM Energy. This is one of the ones I looked like, not Sanchez. Multiple kahunas, mobile breakout from the squeeze, earnings coming into the stock. I like that chart. Gentherm pulled back to a potential buy point, sitting right below the PSAR dot. I don't like all this red stuff here. I do like its earnings per share. And lastly, let me show you the stocks that I looked at this week that I thought were interesting from a buy perspective, and see if there's any of them to talk about before we say goodbye. Who would have thought U.S. steel? But steel stocks look good. Let's look at the industries that I liked. Biofuels. Biotech, Biogen, Clovis, Medivation. Exploration and production, I like BCEI, EOX, PDCE, and SM. Really like this chart, Charles River Laboratories International. Pulled back, been squeezing for 2 months, had a mobile breakout, pocket pivots in Kahuna on Thursday, going through the PSR dot up on Friday. Interesting looking chart. Don't really like the fundamentals, but on the weekly even more, pulled up, pulled back to the 50 weekly. Looks like it wants to run and wants to run now and far. So I like that one a lot. Oil and gas services, Baker Hughes, Rowan and RPC are a couple smaller ones. Refiners, I mentioned them, and steel. I just quickly look at U.S. Steel and AK Steel. Look at the earnings per share growth on U.S. Steel. This is a turnaround in the making. Big bounce up here on earnings. Look at these numbers. Trades at a multiple of 55, which is high, but if it can keep up those multiple, that growth rate. And the other one here is AK Steel, which is in a nice run. Certainly a Jesse Stein pick as well, driven by earnings growth. On that note, I'm going to go back to my starting slide and really say that's where it's at. Was Friday the end of the correction or the beginning of and I only should have said a once, a counter trend rally before the ultimate deeper fall? I don't know. I'm going to look at my stakes that I showed you on the S&P and the Dow. You could do the same stake on the NASDAQ. As long as we stay above the low of last week, I'm going to be leaning towards the bull. I take out that low, I'll close out my bull positions and add to my shorts. I think the market can go either way. Last check at the numbers from the pre-market. Doesn't look like anything has changed. It's late. It's time to say goodnight. Have a great week. Sorry this is